أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله صلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. We started chapter 12 last week. Inshallah, we'll continue where we left. There are four big activities in chapter 12. They are sales order entry, shipping, billing, and cash collection. We'll discuss the first two, the sales order entry and shipping. We're going to go to the next one, which is billing. Billing involves invoicing and updating the accounts receivable. Now, invoicing is the same as billing. The word invoice can be used in replacement of bill. When the bill is sent, billing and shipping is done almost simultaneously. So when the bill is sent, it is done almost at the same time as shipping, and accounts receivable is debited and sales is credited when the bill is sent. Now, the bill is a very important step. The billing is a very important step, and there are certain things that must be ensured in the billing process. That is, the bill must be accurate and it must be timely. It must have all the items, the quantity, the prices, and the terms in them for it to be accurate. So obviously, the customers are going to be upset if you send them a bill for items that they did not buy, or the quantities are wrong, or the prices are wrong, or if the terms are wrong, meaning there is a due date to pay the bill, and if there is a discount period, if they pay 10 days, they're going to get a discount. Those are part of the billing terms. Those should be accurately sent to the customers, and it should be sent timely. If you're late in billing, that is a loss for your own company, because you're now delaying the collection of the payment while you have already given the customers the service or the product. And if this is automatically done or electronically done, then it can save both cost and time. Now, the accounting software that you use, the Wave accounting software, can be used to prepare bills. And most accounting softwares have this capability, and pretty much all of them have the capability of preparing bills or invoices. And if it is used, if the software is used, then obviously it is faster and it is less expensive than having somebody manually do the billing. It's obviously going to be more accurate if it is done electronically. Now, I mentioned the accounts receivable is debited when you send the bill. When the payments are received, the accounts receivable is credited. So when the bill is received, you will receive cash. That means you debit cash and you credit accounts receivable, right? When the bill is received. The billing can be done in two different methods. The first one is open invoice, or it is also known as pay per invoice. That is, let's say you have the seller as Al Rayyan Water Company and a supermarket buying from Al Rayyan. Al Rayyan sends the supermarket a truck of water every week. What Al Rayyan can do is Al Rayyan can bill the customer for every time a truck of water is sent. This would be open invoice or pay per invoice. So they will send them an invoice every time a shipment is sent. The other option is to do balance forward, which is pay per monthly statement, meaning Al Rayyan is only going to send one bill at the end of the month, and it will show all the 4 trucks of water that were sent during the month. And this is called balance forward. The second method is beneficial in two ways. One is it creates even cash flow for the company that is selling, and the other is the workload is distributed. What does this mean? If you have 100 customers and you send every customer a weekly invoice for the weekly shipment, that means you have to send 400 invoices throughout the month. But if you only do once a month, then your work is cut down 1/4. You only have to send one bill to every customer once a month, and then you can distribute this work throughout the month. So you can send 25 customers a bill in the first week, another 25 in the second week of the month, another in the third week, and so forth. Because you're distributing the work and you're sending the bill throughout the month, the payments also are going to come throughout the month, and your cash flow coming in also will be evenly distributed throughout the month. So these are the two advantages of doing the balance forward. Workload is distributed, it is reduced, and the cash flow coming in is even. Okay. I'm going to continue talking. If you have any questions, please ask me. I'm not going to stop and ask you every time after every slide. If you have any questions, please ask me, and I'm going to stop and answer the questions, inshallah. And also, if you review these slides later, or if you review the material and you have questions, you can email me, or you can ask me in a future class as well. Okay. Now, the payment information, the billing, a digital image can be stored for the customers and for other employees of the company to see. And the benefits of that is it can be instantly retrieved and transmitted. So it can be looked at by multiple people from multiple locations at the same time, and they can download it. And it also reduces the storage space. So for example, the slides we post in Blackboard, and all of you can download from your computers at home. Multiple people can look at it at the same time, and it does not take any storage, physical storage. Imagine printing 27 copies of the slides and distributing. That would be much more work. It would waste paper. It would take more space, and you would have to physically give it to the people instead of electronically saving. So electronic use of the billing and storage of the electronic image, digital image, is beneficial in multiple ways. There are a few things that have to be taken into consideration when you're doing the billing. One is returns. If the customers have returned something, if the customers ordered something and you shipped it to them and then they return some of the items, and the bill should not include those items if you accepted the return. So if you sold 10 computers to a customer, they returned 2 computers to you because for whatever reason they did not want them, then those 2 computers should not be added to the bill. Number 2, allowance for damaged goods. Now, if you send the customers goods that are damaged or gets damaged on the way, but they can be used, and you can offer the customer a discount. This is called an allowance for damaged goods. So you can bill the customers less than the full price and ask them to keep. If the customers agree, then you don't have to get those items back. That saves you the cost of shipping. The second thing is, if you get the damaged goods, it's difficult to sell it to another customer. If you are able to offer a discount and the customer agrees, then that is a better option, and you can adjust the bill. Number 3, write-off of uncollectibles. If you have customers that have received multiple bills for the items you have shipped and they have not paid, you eventually have to write it off as a bad debt expense, and you cannot continue to bill. But this cannot be done by the same department. It should be done at a different department. Accounts receivable should not issue the credit. It should be done by another department. Maybe there is a supervisor in another department, or a credit manager, somebody other than the accounts receivable clerk, to separate the duties to make sure that there is no fraud done. Because let's say the customer is a relative of the accounts receivable clerk, and they may just record the bad debt so that the relative does not have to pay. It has to be approved by somebody else if the customer is not paying, to make sure that there is no fraud. The next step is cash collections. And you have all seen cashiers. Cashiers are responsible for handling the payments. This is the most liquid asset, meaning this can be stolen very easily. So therefore, this is separated from all other duties. The cashier sits wherever the payments are made and they don't do anything else. Their job is to handle the cash and give the customers the receipt once the payment is made. And multiple controls can be put in place to ensure that cash is not stolen. One we discussed the other day, where the cashier is not usually allowed to carry any personal cash. All cash the cashier is handling belongs to the company. Another method is, you may have noticed if you go to the supermarket, the cash drawer does not open without a sale. So if you're standing at the supermarket, the only time the cash drawer opens is if there is a sale. That means there is a customer standing there when the cash drawer opens, and it's difficult for the cashier to take money and put it in his or her pocket if there is another person standing there. So this is a control. Other control methods could be using of video cameras, counting the cash multiple times during the day, etc. There are possible approaches of collecting the cash. The first one listed here is turnaround documents. Now you remember we discussed turnaround documents where the bill has two parts. One of the parts the customer keeps, the other part the customer sends back. And usually there is a barcode in both parts. Remember I showed you the Karama bill? You remember? I showed it to you in the previous chapter when we were discussing. So the customer turns around and sends a part of that bill. That's why it's called a turnaround document. It's a method of collecting the cash. Using of manual and electronic log boxes. Log boxes are uh, similar to the charity boxes that you see in the supermarkets and the malls, where there's a small opening for you to put the money, to put the payment, and you can only put the item in the box. You cannot take it out. So if you want to make a payment, you can put your money in the envelope, write your name and your customer number, and you can put it in that box. This is a lock box where payments can only go in. Nobody can steal from there, right? They can be manual and electronic. For example, there are ATM machines that can accept payments for companies such as Vodafone and Uridu and Kahrama. So they have a special account number, password, etc. You can put your money in an envelope or your check in an envelope. You can deposit it into that lockbox. The third method is electronic fund transfer, EFT. You can use internet banking to transfer money from your bank account directly to the seller's bank account or the service provider's bank account. And during that, you will have financial EDI, financial electronic data interchange, where you will get a message with a confirmation of your payment or a message with your account update. Usually these messages are more secure. They're called financial electronic data interchange, EDI, electronic data interchange. They are more secure because they have sensitive information for the clients, for the customers' accounts. The last one is procurement cards. Procurement cards are issued by the seller to make the purchase easy for the buyer. I'll give you an example. Let's say I have a 5,000 Rial research grant, and I am allowed to buy office supplies for my research and for my work in the office from that fund, and I am allowed to buy that from Al Jareer. So I can get a procurement card from Al Jareer, which will be paid by Qatar University. I can take that procurement card and I can go to Al Jareer and buy whatever I need for my research, paper, ink, books, supplies, etc. But it will be restricted. So I cannot go and buy, for example, a video game. So the procurement card is there to skip the steps of ordering and shipping and billing. It is all of this is done in one step. The seller can accept the procurement cards from the buyer, and then later the university would go and pay for these purchases. So this helps both the buyer and the seller. These procurement cards can help both the buyer and the seller in making the purchase easier, in making the steps easier, and perhaps skipping some of these steps as well. Does that make sense? You understand the idea of procurement cards? Okay. The next slide are control objectives for transactions. These control objectives, internal control objectives, are applicable not only to the revenue cycle, but they're applicable to all of the business cycles. And we're going to talk about them here one time, and we're not going to repeat them in other cycles, but they apply to all cycles. So when you're studying this, you should keep in mind. Number one, authorization. All transactions that need authorization should be authorized. For example, if a customer is going to buy now and pay later, then the credit must be authorized. And this must go through the proper authorization process the company has, right? Nothing should be skipped. Number two, validity or occurrence, meaning anytime a transaction is recorded, it must be a valid transaction. It must have happened. It must have occurred. Meaning, you cannot just debit accounts receivable and credit sales when you did not sell something. There must be a sale. There must be a purchase. There must be the actual transaction, the event that took place before you can record that, right? And I know this is common sense. There are companies that record sales when there are no sales, because you don't need to show cash if you're recording a sales against accounts receivable. It shows additional sales, it shows additional profit and income, and you did not really have any sales. So this should not happen. This should not be done. There should be proper steps to make sure that this does not happen. Number three is opposite of number two. That is, everything that happened should be recorded. So all transactions that took place must be recorded. No sales should be missed. No purchase should be missed. No payments should be missed. All of them should be recorded completely. Number four, all of them should be recorded accurately. All the numbers, the dates, the amounts, everything should be recorded accurately. Number five, safeguarding, protecting the assets, including data, from being stolen or from being looked at by people who are not authorized to look at, right? Safeguarding the assets, including data. Number six, the operations must be efficient and effective. Effective means do the right thing, and efficiency means do it with minimum amount of resources. So it should be done correctly and there should be no waste. For example, if you have 10 customers and you need one customer service representative to serve 10 customers, then only one customer service representative should serve 10 customers and not two. If you have two serving 10 customers when one can do the job, that means you are not efficient. You're wasting resources. Although the customers may get the similar service, right, from one or two representatives. So serving the customers well is effectiveness, and serving them with the least amount of resources is efficiency. And this applies to any and all activity in the business. Number seven, compliance with regulations. If there are government, environmental, health regulations, then the company must follow them, right? The company must comply with them. And you can see this in action. Due to the COVID-19, the ehteras must be shown, the temperature is taken, right? All of this. The expired items should be removed from the shelf. There is a hazard, there is a danger with the product, the customer must be informed. All of these things are part of compliance. Number eight is disclosures, which is all information must be disclosed to the customers or suppliers or anybody who needs to know the information. An example is clearly labeling the products with the right prices. Sometimes something is on sale and then it is no longer on sale and they forget to, or maybe intentionally don't remove the sign that the item was on sale. And then you think that something is 10 riyals and you take it to the counter and it's actually 20 riyals, right? I'm sure it happens to many of us every now and then. So this is not proper disclosure, right? Proper disclosure is letting the customers and the suppliers and all the people know all the information that they need to know before they do the business. Does that make sense? Okay. Now, part of the control procedures also include these items here. Number one, using of simple documents, right? Using of simple documents ensures accuracy and reliability, and it also makes it faster. I'm sure you have seen certain documents completed in certain business transactions. For example, when you return something to a supermarket, they fill out this form that has the information on what was returned, why it was returned, and how much money was given to the customer or how much credit was given to the customer. This type of forms must be simple. If they're not simple, then there is a high possibility of them being inaccurate. Number two, application controls, where the items entered into the system are valid and they're entered into the right fields. For example, if you go and try to purchase something online or try to complete something online, a form online, then if you enter an amount that is unreasonable, so let's say you buy 10 boxes all the time and you by mistake enter 100, the system would ask you, is this accurate? Do you really want to enter 100 because the amount seems higher than your usual purchase? So this is checking the validity. Field check is if you enter the wrong information in the wrong box. So the box says enter email address and you enter phone number by mistake, the system will say this is not a valid email address. So these are application controls that ensure the accuracy of the data entered for purchase and sale. Number three is keeping track of who did the work and when it was done. So the documentation of who completed, who reviewed, who authorized, and when, all of these are necessary to go back and find out if something went wrong. If you know who completed, when it was done, etc., you can easily find out if there is something that was done inaccurately. You can ask the person who did the work. Number four is using pre-numbered documents, which an example of it could be a check, could be an invoice. So these numbers, these documents are numbered with pre-numbered sequences. For example, 1001, 1002, 1003, like that. And if one of these items go missing, if one of the checks is missing, then you can search for it because you know that they are supposed to be in serial order. And this ensures that the transactions are complete and all of them are recorded because of the serial numbering. And the last one is restricting access blank documents. So a blank check, for example, if you know the signature of the person who's supposed to sign the checks, and get a blank check, you get a hold of a blank check, you can take money from the company. So restricting access to those documents ensures the reduction of theft. It should be kept under lock and key, and only a few people should be allowed to access these documents, those who are responsible for processing those blank documents, such as a check, right? Okay, the next four slides are going to address things that can go wrong in the four activities in the revenue cycle. The first one is sales order entry. Threats that can happen in the sales order entry include, number one, incomplete or inaccurate orders. So the customers could place an order and the order could be incomplete or inaccurate. Maybe the customers forgot to add everything, or the person taking the order did not hear them properly, or even if it is online, the customer is given an opportunity to look at the entire order before submitting the final order, so the customer can make sure that everything is complete, everything is accurate, and change if necessary, right? Number two, sales to customers with poor credit. Selling items to customers who are not going to pay. And to ensure this does not happen, the customer's credit should be checked properly. The customer's bank account information, the customer's sales and payment history, all of this should be checked to make sure that the customer is going to pay for the purchase they're making. Number three, legitimate orders. Now, maybe sometimes someone could be ordering just a prank order, or somebody could be ordering on behalf of someone who did not actually order. Verifying the orders, especially new customers, calling them and making sure their address is accurate, they are actually, their phone number is the number that they gave you to call them back, etc., to ensure that the order is not a fake order, especially for new customers. Number four, stock outs. And number five, carrying costs. These are opposite of each other. Stock outs can happen when you do not have enough inventory items, and your customers will come and they will not find what they need, and they will go to somebody else. This will cost you sales. On the other hand, if you have too many, then it may be that you don't sell all of the items before they expire, or they may go out of fashion, or the next model could come out. So if you have too many iPhone 11s, you could have the next model iPhone 12 come out, and you will have to then mark down the price of iPhone 11. You would have to sell it for a lower price. So neither one is good. Neither stock out is good, nor carrying cost or markdowns are good. You need to carry the right amount of inventory based on your sales history, based on your customer size. All of that must be taken into consideration, size of your business, to order the inventory. And we're going to discuss this even more in the next business cycle. You can order the right amount of inventory so that you don't run out, nor do you have too much leftover extra where you have to either throw it away or sell it for a very low price. So these are threats that needs to be mitigated in the sales order entry. In the shipping, there are two threats here. The first one is shipping errors. So you could send the shipment to a wrong address. You could send it to the wrong customer, or you could send it to the wrong items, right? To ensure that the orders should be verified before shipment with the customers to make sure that it's going to the right place. And you may have noticed, if you order something, the delivery driver calls you before they come to your home, right? To ensure that they're coming to the right place and they're bringing the right items. The other threat is the theft of inventory, where during shipment, the inventory moves multiple times. If you have the inventory in the warehouse and you lock it, when it's not shipped, it's easy to protect the inventory. But when you're shipping, inventory first is moved from the warehouse to the truck, and then the truck is on the road, and then there is an unloading when it reaches the customer's destination. In any of these movements of the inventory, it can be stolen. So special care must be taken when handling the inventory when it's in these movement stages. The threats in billing include the following. The first one is failure to bill. So if you forget to bill, or if you miss billing a customer even for a month, then that means you lost that revenue. So this must be done with absolute care. Number two, errors in the bill, right? Either you bill the customer too much, or items that the customers did not buy, which will make the customers upset. If you bill the customer too little, that means you have lost money, right? So the billing must be accurate. Number three, errors in customer record update. You may update the wrong customer, right? You may receive a payment from one customer, you may send a bill to one customer, and you may record the accounts receivable in another customer's account. And it is very easy to do. That's why using automated processes like the turnaround document or barcodes, etc., reduces the errors of updating the wrong customer. And the last one is uh, cash collection, where theft of cash is a threat, and we discussed a little bit uh, earlier, where you can have controls with the cashier, where the cashier does not handle any other cash and the company cash. The cashier cannot open the drawer unless there is a customer present. You count the cash multiple times during the day. You put video cameras and other control mechanisms to ensure that the cash is not stolen. It's very easy to steal the cash because it's a liquid asset. And if you have a 100 real bill, is a 100 real bill. You don't know if it was a company asset after it's stolen, because nobody records the numbers that are on these bills, although there is a unique serial number in every cash bill, but who records that? So extra care should be taken in handling the cash. Okay, now these last two slides, we're going to discuss the information that is needed to conduct good operations in the revenue cycle. Number one, response and delivery time. If your customers are asking for something, how long does it take you to respond to that request? Or how long does it take you to deliver to the customers? If you have a really busy time, let's say you're a pizza store and it is Friday night and you have a lot of people ordering, you have to tell the customers the right time period. If it's going to take you an hour and a half, you should tell the customers that it's going to take an hour and a half. Maybe the customer will decide to come and take the pizza, right? Instead of you telling them 30 minutes and after 1 hour the pizza is still not there, right? It upsets the customers. So you need to know what time frame is needed to serve the customers, and you need to inform the customers of that. Number two, percentage of back orders. Back orders are those where the customer comes and looks for something and you don't have that item. So you go and order it again before the customer can come back and buy it from you. Usually the customers will go somewhere else to buy that item. They're not going to wait for you to get that inventory unless you have something very unique that nobody else has. Even then, this is not good customer service. So you need to keep track of how many times customers come and look for something and you don't have, and you have to order. This is not good if you have a large percentage of back orders. Number three, customer satisfaction data. You will notice, in many restaurants like Hardee's and Kentucky Fried Chicken, they give you a receipt on the back. There is a website where they request you to take a survey, and if you do, they might give you some free food next time when you come, because this customer survey data is necessary for them to know how they're serving, how good the service is, right? Number four, market share. Market share is you want to know how many customers buy your product and how many customers buy your competitor's product. So if you're Apple, you want to know how many customers use Apple and how many customers use Samsung, so that you know how you're doing compared to your competitors. Are they outperforming you, or are you doing better than them? You need to know your market share, and you can figure this out from the market share information. Number five, sales trend. You want to know, are you selling more than previous years or less? Which way? Is it upward, it's going up, or it's going down? Obviously, upward trend is better than downward trend. And it also depends on the situation. For example, if the general trend that everybody is having less sales than last year and you're maintaining what you had last year, that obviously is good. You're not increasing, but you're not decreasing when everybody else is decreasing. So you want to know the sales trend. Number six, you want to know your profit by product. You want to know if you're selling more than one product. If you're selling tablets and laptops, you want to know which is more profitable. You also want to know by customers. If you're selling to individual customers and you're selling to other businesses, you want to know which one is more profitable, right? If you have different categories of customers, for example, professionals or students, you want to know which customers are more profitable. And then you want to know the profit by region. So if you're selling in multiple regions, you're selling in, for example, Qatar, you're selling in Oman, you're selling in Malaysia, you want to know which region is more profitable, right? And then number 7 is effectiveness of ads. You want to know if your ads are effective, and you can test that by looking at your sales following an ad, a TV ad or a billboard ad placed. You can follow the sales, your sales following that, the placement of that ad for a few days to see if your sales have gone up because of that ad. If it has, if the sales has gone up, that means your ad is effective, right? So you want to track that. And if it works, you want to do that again, of course. You also want to know the performance of your sales staff. Some salespeople are good at selling and some are not. So you want to see why the good ones are good, and you want to learn and teach it to those who are not doing that well. Maybe the people who are selling more are more friendly to the customers, answer more questions, they make better suggestions. So all of this must be known. You need to know this information. Bad debt expense. You need to know how many customers have not paid, and you don't want too many customers to be in that category. But you need to track how much your bad debt expense is. You need to have a benchmark that what is the percentage of customers generally in the businesses comparable to yours do not pay. If the industry average is 1% and your bad debt expense is 5%, that means that is not good. You're not doing proper credit check of your customers. Number 3, days receivable outstanding, meaning how long does it take your customers to pay after you send them the bill, right? You record the accounts receivable. How long does it take for you to collect the cash? Obviously, the shorter the period is, the better it is. So you want to know how long it takes. Number 4, slow-moving products. If you have items that you purchase or you make that the customers do not buy and you have to keep them for a long time, you need to know which products are slow-moving. Because if you have items that expire, then if they don't sell quickly, you have to throw them away, and that is a loss for you. If they go out of fashion or they become obsolete, then you might have to sell it for you might have to sell those inventory items for a lower price. And again, that is also a type of loss. So you want to know which items are slow moving, and perhaps you don't want to sell those anymore, or you want to make or buy fewer of those items. Number 5, projected cash inflow and outflow. You need to know how much money you're going to get over the next week, next month, next 6 months in sales, and what are your projected expenses, how much money you're going to have to pay in salaries and other expenses. You want your inflow to be more than the outflow, because otherwise you have to borrow money. So this information should be projected. This is in your budget, which you have studied in the managerial accounting class, where you forecast the sales, you budget the sales, and based on the sales you make or buy the items. Number 6, accounts receivable aging. The older the accounts receivable gets, the less chance you have of collecting it. So a 30-day-old accounts receivable has a higher chance of collection than a 60-day or a 90-day-old accounts receivable. You want to keep track of how old those accounts receivables are. Number 7, revenue margin. Revenue margin is gross margin minus selling cost. What is gross margin? We studied this in managerial accounting. Gross margin is the same as gross profit. It is sales minus cost of goods sold. Remember this? Okay. Sales minus cost of goods sold. That is gross margin or gross profit. Same thing, right? gross days receivable, there's a question from Sharad that says, days receivable, is it different from accounts receivable aging? Yes. Days receivable is those customers who are paying, you want to know how quickly they pay, how long does it take. So if you're collecting the accounts receivable in 3 days, 4 days, 7 days, that is better than collecting in 10 days, right? And aging are those customers who have paid, right, for 30 days or 60 days or 90 days. The longer they haven't paid, the higher chance of you recording that as a bad debt expense. So the days receivable outstanding is the for the customers who are regularly paying. The aging categories are for those customers who are going towards the bad debt expense. Does that make sense? Okay. All right. Coming back to our last point, you understand the gross margin, which is sales minus cost of goods sold, which is the same as gross profit. There is another calculation, which is revenue margin, which is gross profit, gross margin minus selling costs. Selling costs are costs that are associated with selling the item. For example, you might have to pay the salesperson a commission, or you might have to pay for delivery. All of those are selling costs paid by the seller, right? So you want to know what selling costs are associated with your sales, and that calculates for you something called the revenue margin. You want to know, obviously, the lower the sales cost or the selling costs are, the higher the revenue margin is going to be. Okay, so this brings us to the end of chapter 12, and I know I've given you a lot of information, but most of this is common sense. So study this, and you can review the video again, and if you have any questions now, you can ask me, or if you have any questions later, you can ask me in a future class, or you can send me an email. Are there any questions now? Do you have any questions on what we discussed in chapter 12? Okay. Now, I know you're under the midterm fatigue, right? Have your midterm exams ended? Are you done with your midterm exams, or you have still some left? Done? Okay, alhamdulillah. Now, I hate to do this to you, but you have an exam in my class next Sunday. Do you remember what it is? Chapter 5. Very good. Chapter 5. So the exam is on the 18th of October, next Sunday. We'll start at 3:30 and it will end at 4 o'clock, and we'll not have a lecture after that on that day. So we'll finish with the exam. It's 10% of the grade, 20 multiple choice questions, and there are some questions that are simple, straightforward, will take you less than a minute to complete, and there are a few that will take you maybe a couple of minutes. So you'll get 30 minutes. Most students usually finish within 20-25 minutes, but you have 30 minutes if you need. The conditions of the exams are similar to the quizzes you have taken. So everything, all the rules, all the procedures are exactly the same as the quizzes you have taken, quizzes 1 and 2, except this is only on one chapter, and there are 20 multiple choice questions in this exam. Okay, and I'm going to give you the password at the beginning of the exam. If you have any questions, it's only one chapter. You should study it, and this is a chance for you to do well in this test, because it's only one chapter. You should study, and if you have any questions, you can ask me either on Tuesday or via email after that. Okay? Is this clear, what I'm asking you, or what I'm telling you about the chapter 5 exam? All right. Now, the questions on the multiple intelligence, there are still some students who haven't completed the questionnaire in your class. Do you have um, a group, a social media group for this class? Do you have a way of informing the other students who are not here to complete the questionnaire? You have a group. Ahmad, can you announce in that group those students who haven't completed to complete by today? Because I need to know this information before I can form the groups. And if there is a student who is planning to drop, please ask that student to inform me, right? Please ask that student. I was waiting to do this after the drop date, but the drop date is now extended to Thursday, but I don't want to wait until Thursday to do the groups. So number one, I need two things from you. Number one, ask the students who haven't completed to complete. Number two, ask them to inform me if they plan to drop. If anybody plans to drop, please ask them to tell me, email me, and let me know. Is that clear, Ahmed? Okay, excellent. Is there any question from you? Any question for me related to anything, Chapter 12 or Chapter 5 exam or questionnaire or anything else? Anything else I can do for you? Because we have some time. If you have questions or anything else you need from me, we can entertain that. You should be. I will try to form the groups, inshallah, by tomorrow. And you should be working on the project. And if you have questions on the project, you should ask me as well. All right. There are no questions. And there are no samples of multiple choice questions for Chapter 5. Just study the material that we discussed. Okay? All right, then. I will see you in next class, inshallah. Assalamu alaikum wa rahmatullahi wa barakatuh.